I remember the first day I bought stocks. It was a bright, sunny Monday morning, but my heart was pounding like I was betting on the future. I had spent almost 3 months of savings, about $1,000, investing in Tesla stock. Why Tesla? Because I had just seen a YouTube video titled Tesla to the Moon Rocket, and I was drawn in like millions of others. I had no idea what PE was, no idea whether Tesla was making or losing money, and no idea what systemic risk was. All I saw was a crowd screaming, "Buy now before you miss out." And I didn't want to be left behind. I don't invest with knowledge, I invest with emotion. At first, my account grew rapidly. $1,000 became $1,200 in less than 2 weeks. I felt like a genius. I told my friends, "See? Investing is as easy as a game." Little did I know that the easy was just the beginning of a costly lesson. A few weeks later, the market corrected. Tesla dropped sharply after a disappointing earnings report. My account lost $400 in 3 days. I panicked. I sold at a $450 loss, vowing never to invest again. I felt stupid, hurt, and disappointed in myself. A month later, I read an article titled, "You Don't Need to Pick Stocks to Get Rich." The article was about ETFs, exchange-traded funds, where you can buy the whole market in just one ticker. Instead of picking one company, you pick the top 500 companies through SPY or VO. I was convinced not because it was good, but because it was sustainable. I no longer wanted to get rich quick. I wanted to get rich for sure. This time, I didn't put all my money into one trending stock. I started with a single ETF, VO, which tracks the SP 500. I set up an automatic investment of $100 per month, no daily chart reading. No checking my account every night, just investing consistently like a farmer sowing seeds. I began to realize investing is not about making money quickly, but about learning to be friends with time. I learned to accept that the market will go up and down. I no longer panicked when I saw my account dwindle. Instead, I began to feel at peace as someone who had a clear plan for the future. Looking back, I started asking myself, which would make more money if I invested in both ETFs and individual stocks? And that's what led me to a 2-year experiment, a portfolio of hand-picked stocks, Apple, Nvidia, Google, a portfolio of only VTI and VO, broad market ETFs and the SP 500. Not just to make money, but to figure out what really works for someone who doesn't have a lot of time, doesn't have a finance degree, and just wants to build freedom. When I started investing, I was like someone walking into a jungle without a map. I had a phone full of stock tracking apps, but no background knowledge. I didn't know what diversification was, didn't know what a PE ratio was, and didn't understand what made a stock go up or down. I picked stocks because they stood out. The internet was full of sensational headlines like, "This stock is about to go up 10x. If you don't buy XYZ today, you'll regret it for the rest of your life." And I believed. Without a doubt. The first time I got hit was when I invested in a small tech stock that some YouTuber analyzed as being the next Amazon. I put in $800, or 80% of my savings at the time. After just 2 weeks, the company reported a huge loss, the market reacted negatively, and the stock dropped 35%. I panicked. I sold out of fear, losing both money and confidence. What's worse, I blamed the market, not realizing that I was the one who was unprepared when I entered. When you don't have a clear strategy, every market move is a psychological storm. I bought stocks when I was excited, and sold them when I was scared. Just like the crowd, I gradually realized that I wasn't investing, I was gambling. Once I bought Apple stock because I read rumors about the new iPhone launch. After the rumors turned out to be incorrect, the stock dropped slightly by 5%. I immediately sold it. But a few weeks later, when the financial results were announced, Apple rose sharply by 15%. I missed the rally because I couldn't be patient for 2 weeks. After a few times like that, I started to take a serious look at myself. I couldn't continue to let emotions control my investment decisions. I remembered a saying: stocks are a tool to transfer money from the impatient to the patient. Warren Buffett. I started reading books. Books like The Intelligent Investor, Benjamin Graham, Common Stocks and Uncommon Profits, Philip Fisher, A Random Walk Down Wall Street, Burton Malkiel. I discovered 80% of individual investors lose money not because they pick the wrong stocks, but because they don't have a clear plan and let their emotions rule. One of the concepts that completely changed my thinking was, you don't have to win every stock, you just have to win the entire portfolio. I used to think I had to pick the right golden stocks to get rich, but after reading about professional investors, I realized even Warren Buffett doesn't pick 100% right. The important thing is to allocate capital properly, not to let the risk accumulate in one place. I learned to diversify. I divided my portfolio into 3 parts: technology stocks, market ETFs, and cash reserves. No more all-in, no more rumors, but fundamental analysis and investing in the industry I understand. I did a little math. If I invest $100 per month in an ETF like VTI with an average return of 8% per year, after 20 years, I will have nearly $55,000. After 30 years, that number is over $135,000. I was stunned, because I never thought that small regularities could produce such huge results. I began to see clearly. Investing is not about finding big opportunities, it is about doing small things right. Long enough. After a year of investing failures, I look back. I lost about $1,500 because of emotional investing, but I learned a lesson worth tens of thousands of dollars in the future. I started recording every trade, every buying and selling decision. I kept an investment journal every week. I learned to control myself, instead of trying to control the market. After nearly 2 years of strategic investing, I decided to do a serious experiment: a portfolio of only ETFs, VTI, VO, QQQ, a portfolio of only stocks I picked: Apple, Nvidia, Shopify, AMD. I invested consistently in both each month, $200 each, and I recorded everything: growth, volatility, emotions when holding. The goal was not just to see which one made more money but also to see which one fit my lifestyle, psychology, and long-term goals. I started with the dream of getting rich quick and failed. But it was the first wounds that taught me to become a real investor. After nearly 2 years of struggling with emotional decisions, I started to apply a specific investment system. It was no longer buying whatever you feel like, but investing based on clear financial goals, principles for choosing assets, portfolio allocation according to risk and time. I set a simple formula for myself: investing is a combination of growth, stocks, and stability, ETFs. After much testing and tweaking, here is how I am currently allocating my capital: 60% ETFs, index funds, VTI, Vanguard Total Stock Market, represents the entire U.S. market, QQQ, Invesco Nasdaq 100, Technology, Growth, SCHD, Schwab U.S. Dividend Equity, Stable, Consistent Dividends. Every month, I invest periodically, DCA dollar cost averaging, into these 3 ETFs. I choose ETFs because low fees, no need to pick stocks, lower risk than individual stocks, steady growth if held. Long-term, 30% individual stocks. I choose stocks based on the criteria: sustainable competitive advantage, sound financials, long-term vision of management. My current favorite stock list: Apple sustainable ecosystem, high profits; Nvidia AI trend, technology leader; Costco solid business model, steady growth; 10% cash or savings fund, to always be ready to buy the dip. Cash also helps me maintain a stable mentality when the market is volatile. What I found special about investing in ETFs: I sleep better. No more waking up scared because a stock has dropped 10% after bad news. No more watching the board every day. With ETFs like VTI, I just have to trust in America and believe that the economy will continue to grow for the next 10, 20 years. And if that is true, my ETF portfolio will continue to grow steadily. Since adopting a strategy of investing in ETFs every month, I have noticed steady growth, no more getting carried away by emotions, less anxiety, higher performance. I'm not completely done with stocks. I still believe that some companies can deliver superior returns if you understand them. However, stocks require deeper analysis, financial statements, products, market share, patience in waiting for the right moment, a stable mentality when the stock fluctuates. For example, Nvidia I bought at $170, it dropped to $135. I held on, and it's now over $300. But if I didn't understand the true value, I would have sold long ago. After 18 months of regular monitoring of the portfolio, ETF, average increase of 14 is 16%/year, stable, stocks, large fluctuations, some codes increased by 40%, some codes decreased by 12%. Psychologically, ETF helps me calm down. Stocks sometimes make me impatient. I came to the conclusion ETF brings peace of mind and long-term stability. Stocks can bring higher returns, but with more risk and pressure, so I continue to combine both with ETF as the foundation and stocks as the spice. 4. Growth. I no longer set a goal of how much profit %/month. Instead, I determine, invest regularly every month, do not withdraw money for at least 10 years, reinvest dividends, only rebalance the portfolio every 6 months. I consider investing as a lifestyle habit, not a get-rich-quick tool. To keep things simple, I use Google Sheets, portfolio management, Seeking Alpha Finviz, news and analysis tracking, Fidelity/Vanguard/M1 Finance, investment platforms, US, Tickmill/XTB/Infina, VN4 ETF investing from Vietnam. I don't choose winners, I choose the investment method that suits me best. ETFs give me stability, stocks give me opportunity, and both help me go the long way. If you've ever looked at your bank account balance and felt like you were floating aimlessly in the ocean of life, I know that feeling. I've been there. Not because I'm stupid, but because I wasn't taught how to handle money properly. I didn't come from a wealthy family. I wasn't taught how to invest. I started with $100 and a fear that if I did nothing, I would live forever looking for paycheck at the beginning of the month, running out of money at the end of the month. I used to think financial freedom was when you had $1 million, but after going a long way, I realized financial freedom is not about how much money you have, but about how much control you have over your life. Today, I am not a millionaire. But I am debt-free, investments that are making money, plan for the future, can say no to jobs I don't like, can spend time with my family, with myself, and most of all, I sleep well every night without worrying about money like before. 1. Don't wait until you have a lot of money to start investing. It's better to start with $10, $50, or $100 than to wait forever. 2. The market is volatile, but time is your ally. Hold for more than 5 years, and almost every ETF portfolio will make money. 3. Emotions are your enemy. Fear makes you sell low. Greed makes you buy high. Let your investment plan guide you. 4. Don't follow the crowd. This guy got rich in crypto, that guy became a millionaire in stocks. You don't have to follow their path, find the path that's right for you. 5. Think about your 10-year self. The money you invest today will be the reason you have freedom at 35, 45. Or never. If you've made it this far, it means you want to make a change, and that's more than enough to get started. I don't know where you are in your financial journey. You might be in debt, you might be saving every penny, you might have invested and lost money, or you might just have no idea where to start. I want you to know, it's never too late to start over. 1. Open a reputable investment account in the US, Fidelity, Vanguard, Robinhood. In Vietnam, Finhay, Infina, TCBS. 2. Choose a large and reliable ETF such as VTI, QQQ, or VN30 ETF. 3. Set a regular investment schedule every month, regardless of whether the market is up or down. 4. Track your progress quarterly, not daily. 5. Keep this habit for 5 years and your life will change. I know, investing can be exhausting at times. You doubt yourself, you fear making mistakes, you feel like you're going slower than others. But I want you to remember one thing: financial freedom is not a destination, it's a journey you choose to live on purpose. You don't need to be fast, just persistent. You don't need to be good, just persistent. And you don't need a lot of money, you just need to start. I invested in ETFs and stocks. I lost money, I got tired, I thought about giving up, but I stayed. I learned. I changed. And today, I can share this journey with you. If I did it with my first $100, you can too. Start now.